Okay, welcome back to Cost and Management Accounting at 5. In this video, I want to talk about a question on the calculation of cost of sales after preparation of production cost statements. So we are going to look at question 4 of the question paper of June 2021. So this is a question. If the following information was submitted to you as the cost and management accountant of Knives and Fox CC, and then we are given a list of balances that we are given there. So if you go beneath that, you are also given additional information that you are given in all the required part. Uh, the first part says prepare a production cost statement for the year ended 31 December 2020, of which we are not going to prepare that one. We are only just going to concentrate on the second part, which is 4.2. And we are going to calculate the cost of goods sold during the year ended December 2019. So you'd see that after preparation of production cost statement, these are the figures that were found in after preparation of production cost statement. We have got the cost of production, which was 6,220,000, and under recovery, it was 134,000. So we're just going to use these figures to calculate the cost of goods sold. So if you go to our answer section, you see that we have got a statement that we are going to use to calculate the cost of sales. So we are going to start with opening stock, and then obviously we make some adjustments that are going to fall. But basically, if you look at the formula that we are going to employ to calculate the cost of sales, we are going to say our opening stock of finished goods, and then we are supposed to add the production costs. The production costs of the finished goods are the figure that we got from the production cost statement that we have at the beginning of the question. And then we are also supposed to adjust for under recovery. Remember, in this question, we've got an under recovery, which we are supposed to add the under recovery. And then obviously, after that, you are supposed to get a finished goods available for use. And then after that, you are supposed to subtract the closing stock. So what is going to happen is if this question had an over recovery, it means that we were supposed to subtract the an over recovery. But in this case, we have an under recovery. So we are supposed to add it there, then we subtract our cost of sales. But remember, when you say opening stock, when you add your purchases, when you add your production costs statement figure, that is the production cost, you are supposed to get your finished goods available for use after you've added your other recovery. So if you do this, you are supposed to get your finished goods available for you. So here we've got finished goods available for use. So basically this is what we have. And then if you go further now and subtract closing stock, that's when you are going to get your cost of sales figure, like what we did in the first place. But if you say opening stock plus the production cost, and then you add your under recovery, you're supposed to get your finished goods available for use. And after getting finished goods available for use, then you subtract your closing stock. So this is what we have. So we are just going to substitute those figures with this statement. So the figure that we are going to start with the year is opening stock. Opening stock of finished goods. Obviously, we are supposed to add your cost of production there that we are going to get in the question. So our opening stock, obviously, go to the question now. We try to find out what we have in terms of our opening stock of finished goods. Obviously, this figure, we are going to get it at the beginning of the question. So if you come here, you will see that we are given opening inventory on 1 January 2019, which is in the beginning of the period. So our finished goods has got a value of 470,000. So it means this is going to be our opening stock, which is 470,000. So we come here, we put our 470,000. And then after that, you are supposed to add your cost of production figure. Remember, this figure, you would have got it in the after preparation of the production cost statement. This is the final figure that you get in the preparation of the production cost statement. So in this question, we have the figure given because the production cost statement was prepared in the previous videos. So we've got the cost of production, which is a value of 6,220,000. So this is the figure that we're going to use for cost of production. So if you come here, we've got 6,220,000. And then after that, we are supposed also to adjust for under recovery or over recovery. But in this question, it's an under recovery. So we are also given this figure because this figure was also calculated in the production cost statement, which was on the first part of the question, which is 4.1. So the figure of under recovery was 134,000. So this is the figure that we are going to add there. So if you come here, you see that we are now saying under recovery of manufacturing overheads. So this is an under recovery, so we are going to add it. But if it was an over recovery, we are supposed to subtract it here. So this is what we have. So we put 134,000, and then we add to get our finished goods available for sale. Then finished goods available for use. Finished goods are available for use. You can use the until you say. Then the figure that we have, we add your 470,000 plus 6,220,000 plus 134,000. You're going to get your 6 million. You're going to get your 6,824,000. There's your finished goods available for use. Then obviously now we subtract your closing stock of finished goods. Then we can also find this figure in the question. Let's try to go to the question. Remember the closing stock we get it at the end of the question, that is here. And remember, we also have 3 different of inventories that we have here. So we are just going to pick at the one for finished goods, the one that we use for the calculation of what? Of cost of sales. So we have got it here. That is 270,000. So it's going to be our closing inventory or closing stock. So in this case, we have got 270,000. Remember, we are subtracting as our closing, so show it by putting brackets. So now what we are going to do, we are going to say our finished goods available for use minus our closing stock. Then we are supposed to get your cost of goods sold. So if you calculate it correctly there, you are supposed to get your 6,554,000. And on the description, we are saying this is cost of goods. So this is what we have, guys, according to the video. So this is going to be our cost of goods sold. So we meet again in the next video. Let's stay tuned.